Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, what are the best stocks to invest in for 2018? Answer by Jarnamachi. A common dream of our society is how to become rich. Sincere person set a target to be achieved in upcoming 20 years. I am 28 years old and have set up a target to earn 5 crore rupees INR in the next 22 years with a lump sum investment of 7 rupees lakh. To achieve the target I need to invest in such companies which yield 22% CAGR. Before investing, one should be done a fundamental analysis of those companies. One should be sure whether the company will be able to give that huge return in long-term perspective. There are many points to check on the basis of which you can make an investment in various companies like debt, net worth ratio, compounded sales growth, profit after tax, PAT, growth, return on equity, etc. Pidilite Industries Incorporated in the year 1969. It is a large cap company, having a market cap of 54,383 rupees and 95 paise crore, operates in the chemical sector. Pidilite Industries is an Indian-based adhesive manufacturing company. It also sells art material, construction, chemicals, and other industrial chemicals. Pidilite produces some famous products like Fevicol, Fevikwik, Dr. Fixit, MCO, Roth, Cyclo, Hobby Ideas, Akron, and Ramapol. Here is the detailed fundamental analysis of Pidilite Industries. Market cap 53,656 crore. Debt, equity ratio 0.00. Compounded sales growth 14.14%. Compounded profit growth 19.66%. Return on equity 27.61%. PE 55.54. Whirlpool of India was incorporated in the year 1960. It is a large cap company, having a market cap of 20,064 rupees and 78 paise crore, operates in consumer durable sector. Its headquarters is in Gurugram. It is now one of the leading manufacturers and marketers of major home appliances like refrigerator, washing machine, AC, cooler, etc. in the country. Here's the detailed fundamental analysis of Whirlpool of India. Market cap 19,201 crore. Debt, equity ratio 0.00. Compounded sales growth 11.23%. Compounded profit growth 23.03%. Return on equity 30.44%. PE 54.75. VIP Industries Limited was incorporated in the year 1968. It is a mid-cap company, having a market cap of 5,813 rupees and 9 paise crore, operates in plastics sector. It is world's second largest and Asia's largest luggage maker of plastic molded suitcases, handbags, briefcases, vanity cases and luggage. Company provides travel products, hard and soft-sided luggage, bags, backpacks, duffels, shoulder bags, waist pouches, sling bags, duffel trolleys, vanity cases, office bags and satchels, suitcases, and briefcases. The company offers its products primarily under the brand name of VIP, Carlton, Footloose, Alpha, Aristocrat, Sky Bags, Moderna and Buddy. Here's the detailed fundamental analysis of VIP Industries Limited. Market cap 5,856 crore. Debt, equity ratio 0.00. Compounded sales growth 9.28%. Compounded profit growth 12.92%. Return on equity 23.50%. PE 46.20. Vigard Industries Limited incorporated in the year 1996. It is a mid-cap company, having a market cap of 10,099 rupees and 15 paise crore, operates in electric equipment sector. It is a major electrical appliances manufacturer in India and the largest in the world with an annual turnover of 21.50 billion rupees, by 2017-18. It manufactures voltage stabilizers, electrical cable, electric pumps, electric motors, geysers, solar water heaters, electric fans and UPSs. Here is the detailed fundamental analysis of Vigard Industries Limited. Market cap 8,360 crore. Debt, equity ratio 0.00. Compounded sales growth 24.97%. Compounded profit growth 28.27%. Return on equity 23.66%. PE 62.82. Asian Paints was incorporated in the year 1945. It is a large cap company, having a market cap of 113,612 rupees and 18 paise crore, operates in paints and pigments sector. The company is engaged in the business of manufacturing, selling and distribution of paints, coatings, products related to home decor, bath fittings. It also provides related services. Asian Paints is India's largest and Asia's fourth largest paints company. Its key products/revenue segments include paints, enamels, and varnishes in black. Here is a detailed, fundamental analysis of Asian Paints. Market cap 126,916 crore. Debt, equity ratio 0.00. Compounded sales growth 13.63%. Compounded profit growth 19.67%. Return on equity 31.46%. PE 60.51. Minda Industries was incorporated in the year 1992. It is a mid-cap company, having a market cap of 9,736 rupees and 5 paise crore, works in auto ancillary sector. Its key products/revenue segments include switches, horns, lighting products, scrap, and LED lights. Here is the detailed fundamental analysis of Minda Industries. Market cap 10,903 crore. Debt, equity ratio 0.26. Compounded sales growth 24.34%. Compounded profit growth 55.97%. Return on equity 18.94%. PE 36.59. APL Apollo Tubes Limited was incorporated in the year 1986. It is a mid-cap company, having a market cap of 5,188 rupees and 40 paise crore, operating in iron and steel sector. APL Apollo Tubes Limited has a vast business model across India. Its key products/revenue segments include black pipes, coils, GI pipes, galvanized pipes, scrap, and export incentives. APL Apollo Tubes Limited is the largest producer of electric resistance welded (ERW) steel pipes, including one of the largest section pipe and tube manufacturers in India. It has the capacity to produce more than 1.3 million tons per annum. It caters extensively to the region and exports to over 20 countries globally. The company's vast distribution network is spread across India with warehouses and branch offices in 25 cities. This vast distribution network enables it to be one of the leading galvanized iron (GI) pipe manufacturers in India. Here is the detailed fundamental analysis of APL Apollo Tubes Limited. Fundamental analysis of APL Apollo Tubes Limited. Market cap 4,006 crore. Debt, equity ratio 0.15. Compounded sales growth 36.64%. Compounded profit growth 27.79%. Return on equity 18.39%. PE 25.01. Titan Company was incorporated in the year 1984. It is a large-cap company operating in consumer durables sector. Titan Company is the fifth largest integrated own-brand watch manufacturer in the world. Titan launched Sonata, India's largest selling watch brand, which has established itself as a brand of great quality and unbeatable value for the customer. After Sonata, Titan Company launched Fastrack in 1998 and became an independent urban youth brand in 2005. The brand has carved a niche for itself within categories such as watches and eyewear amongst the youth in the country. In 2009, Fastrack extended its footprint into accessories with a range of bags, belts, and wallets. Titan Company launched Tanishq, India's most trusted and leading jewelry brand. Titan Company operates by 1,400 stores on a total retail area of over 1.8 meters square foot all over India. It has India's largest specialty retail network in over 240 towns. Today, Titan Company Limited is Tata's largest company operating in consumer durables. It is India's leading producer and retailer of watches, jewelry, eyewear, and accessories. Here is the detailed fundamental analysis of Titan Company. Fundamental analysis of Titan Company. Market cap 77,907.67 crore. Debt, equity ratio 0.00. Compounded sale growth 17.69%. Compounded profit growth 19.8%. Return on equity 29.67%. PE 69.97. Thank you. For more info visit Capitalont.com. Answer by Muttaraman RMB. This is like asking a fish directly. I will tell you how to catch a fish here, and you have to implement the learning to pick good stocks for 2018. Majority of retail investors today buy stocks based on the calls that they get from their brokerage house or friends, which should not be the ideal case. as there are several fake messages circulating on a daily basis to invest in operator pump stocks. It is better to learn how to select a stock for investment than select it by ourselves. In this post, let's look at 6 key metrics, ratios, that needs to be looked into before stock selection. PE ratio, price to earnings ratio, formula, market price of single share / earnings per share. Significance, lower the better. What it means, PE ratio means the price that we pay to buy an equity share in a company with respect to earnings, profit, it makes per share. Let us assume there are 2 companies, namely X and Y. Let us assume the price of both the companies is 100/share. Company X makes earnings of 25/share and Company Y makes earnings of 20/share, assuming that both the companies are similar to each other on every other parameter. Which company would you choose? PE ratio of Company X equals 125 equals 4. PE ratio of Company Y equals 120 equals 5. Obviously Company X, because the P is lesser than Y. In general, you need to evaluate the company PE with its industrial average. Note, in certain cases, PE might be more for certain stocks with anticipation that earning will catch up the share price due to no earnings news such as a deal win, etc. Do not compare the PE ratio of stocks from different sectors, as the sectorial average PE will differ. PB ratio, price to book value ratio, formula, market price of a single share / book value per share. Significance, lower the better. What it means, book value means value total assets, post depreciation, of company subtracted by the total value of liabilities and dividing it by the total number of shares the company has. Example, let us assume the company has assets worth 1 crore and liabilities worth 50 lakhs post depreciation. The total number of shares in the company is assumed to be 5,000. Now book value equals 10 million, 5 million / 5,000 equals 1,000 / share. Let us assume the market value to be 900. The PB ratio will be PB equals 900 1,000 equals 0.9. In general, any stock that has PB ratio under 1 is considered to be undervalued stock. Dividend yield, formula, total dividend per share / market value of a share. Significance, higher the better. What it means, it is a ratio that measures how much dividend a company pays with respect to its share price. For example, let's assume a company X that has a market value of 200. If the company pays a dividend of 10 per share, then the dividend yield is calculated as noted below. Dividend yield equals 10 200 equals 5%. High dividend yield indicates the company is good for investment. In most cases where the company pays a good dividend, doesn't retain much of its dividends and generates income to shareholders, so they are called as income stocks. Companies with similar profits that retain most of the dividend invest in the business for business growth. These kinds of stocks are known as growth stocks. DE ratio, debt to equity ratio, formula, total debt, liabilities, of a company / shareholders' equity, total value of a stock. Significance, lower the better. What it means, DE ratio is a measure of company's debt repayment capacity with its shareholders' equity. For example, if the total debt of a company is 20 crores and total equity of the company is 200 crores, DE equals 2200 equals 0.1 equals 10%. The DE ratio of the company is 10%. In general, if the value is less, it's good for investors, as the company has less debt burden and in future, they can take loans for further expansions, etc. This value with this ratio varies according to the sector and its capital expenditure. Sectors like textile, power, telecom and construction will have high DE ratio such as 200% ratio equals 2, whereas sectors like FMCG will have comparatively lesser DE ratio. Hence, while evaluating a company for stock selection, it's better to check the DE ratio with its listed peers. Return on equity, ROE, formula, net income, profit after tax / shareholders' equity. Significance, higher the better. What it means, ROE is a measure of how the company converts the equity capital into profits. This ratio measures how much profit a company generates for every single rupee of its capital. For example, let's assume a company X, with PAT 400 crores and shareholders' equity 2,600 crores. ROE equals 400, 2,600 equals 15.4%. Higher the ROE, it's better for investing. There is no standard benchmark, however one should compare the ROE of a particular stock with its industrial average before taking a decision. Note, a company can be funded by both shareholders' equity and debt. When the company takes high debt and low shareholders' equity route, it may tend to have higher ROE, as we don't take the debt into consideration while calculating ROE. Hence, it's better to check both ROE and DE ratio together for a better interpretation. Current ratio, formula, Current assets / current liabilities. Significance, higher the better. What it means, current ratio is a measure of how easily a company can pay off its debts when they come due with the assets that company has. For example, let's assume a company X, it has total assets of 100 crores and liabilities for 80 crores. Current ratio equals 180 equals 1.25. In the above example, the current ratio is 1.25, which means the company has assets that could help funding the liabilities when they come due. A current ratio under 1 indicates the company is weak in terms of financial, and investors should be cautioned before investing in the shares of the company. Since the way the business is operated varies across different sectors, current ratio of shares with different sectors should not be compared in order to get a meaningful insight. Source: 6 key ratios to look at before investing in a stock. Disclaimer: I am the author and owner of Perfingian, which is quoted as source of the above answer. Answer by Wealth Research. The word investment is very easy to say but the most difficult task to decide. Investment management for both a beginner or an existing player is entirely different. Best stocks to buy in 2018: India, in which investing in an individual stock can be risky and therefore, he or she should start with mutual fund, which is a bunch of different stocks. Whereas, for an existing customer already having mutual fund portfolio, there is a lot of earning possibilities by investing in individual stocks. Always keep in mind that after buying a stock you become a part owner of the company. So selection of these stocks should be done after proper analysis. Best stock to invest in 2018: DB Crore, Danic Bhaskar. DB Crore publishes Danic Bhaskar, the world's 4th largest circulated newspaper. In fact, the group publications put together make it Urban India's #1 newspaper group. In fact, its Hindi newspaper has a staggering 46 editions in 11 states. It also has newspaper in Marathi and Gujarati and also runs the popular radio station 94.3 My FM. Danic Bhaskar in Hindi has leadership position in Madhya Pradesh, Chhattisgarh, Rajasthan, Gujarat, Haryana, Punjab, Chandigarh, Maharashtra, Himachal Pradesh, Jharkhand, Bihar and Delhi. The company is now focusing on digital, where once again it has a leadership position. Punjab National Bank. The bank is in the midst of a huge fraud, however, it may not be a bad bet to buy into the stock at current levels for a number of reasons. The shares of the bank have lost ground from a 52-week high of 245 rupees to the current levels of 98 rupees. Of course, there is a fraud liability of 12,000 crore rupees on the bank, however, we believe that there are a few positives. Let us examine each of these. Yes Bank. Yes Bank reported a good set of quarterly numbers for the period ending December 31, 2017. The net profit rose by 22% to 1,077 crore rupees, as against 883 crore rupees in the corresponding period of last year. Yes Bank saw its net interest income, which is income earned from loans, rising 27% year-on-year, at 1,889 crore rupees. Non-interest income jumped 40% at 1,422 crore rupees. HDFC Bank. HDFC Bank is India's leading banking and financial service company. It is India's largest private sector lender by assets. It has 84,325 employees and has a presence in Bahrain, Hong Kong, and Dubai. HDFC Bank is the largest bank in India by market capitalization and was ranked 69th in 2016 Brand Z Top 100 Most Valuable Global Brands. HDFC Bank provides a number of products and services which includes wholesale banking, retail banking, treasury, auto, car, loans, two-wheeler loans, personal loans, loan against property and credit cards. ITC, Indian Tobacco Company. Indian Tobacco Company, ITC, is one of the biggest conglomerate company in India. It has a diversified business which includes 5 segments: fast-moving consumer goods, FMCG, hotels, paperboards, and packaging, agriculture business and information technology. ITC was formed in August 1910 under the name of Imperial Tobacco Company of India Limited. Currently, it has over 25,000 employees. ITC's major cigarette brands include Will's Navy Cut, Gold Flake Kings, Gold Flake Premium Lights, Gold Flake Superstar, Insignia, India Kings, Classic, Verve, Menthol, Menthol Rush, Regular, Citric Twist, Ice Burst, Mild and Ultra Mild, 555, Silk Cut, Scissors, Capstan, Berkeley, Bristol, Lucky Strike, Players, Flake and Duke and Royal.